Welcome back to watching Business Morning Live on Channels Television. Now to our next conversation. According to a new report by the National Bureau of Statistics, the value of manufactured goods imported into Nigeria declined by 2.11% in the first quarter of 2023. Also, Nigeria's manufacturing sector growth hit a three-year low in the first quarter. But what can we expect for the manufacturing sector in the second half of 2023? Joining me now is Mr. George Onofowokan, Managing Director, CEO, Coleman Wires and Cables, joining me right here in the studio. Great to have you. Good morning. Happy new month.
Happy new month.
Happy new week. Happy new quarter. So much newness. And the last time you were here, a lot has happened.
Yes.
We have a new government. We've seen the FX market being unified.
True.
Fuel subsidy gone. How are you seeing all of this and the manufacturing sector's performance in the first half of 2023?
I think we were bound to see a negative anyway. When you look at it, quarter four of last year, we had the redesigning factor, which literally hit every manufacturer at that point in time. Then you had the first quarter factor of 2023, the same redesigning factor got worse. And you had the ability for people to spend being made difficult, and at the end of the day, you need to spend for anybody to actually sell you something. And eventually, on the simplest factor, on the simple part of it, it's really the negatives. So most manufacturers ended up with a negative balance sheet at the end of the day, so their P&L was going negative in quarter one. So seeing the figures dropping 2.1 was definitely factual. It was going to happen. And we had already seen the trend from the quarter four, and then we saw the trend actually end up backfiring on everybody by quarter one of 2023. Eventually, what we've seen in quarter two of the year is similarity. The only difference is that now you had this impact of the election, which also, plus the negative of the redesigning factor. We ended up with, now, election over, new government, new optimism, and I believe that's where we have to now start looking at where's the trending going between the next two quarters and the future of the market, and what would be the repositioning. So you take the negatives first. Now, what are the negatives? Now, to anybody redesigning, secondly, if you look at what the FX unification has cost, which is part of what we discussed at Sunrise, I think a while back, and everybody asked, what do I think? I said, first of all, unification, subsidy removal needs to go. And eventually, quite a few of the things that was discussed on that day in Sunrise, literally almost 50% of it is what the government ended up doing when we saw it. So we're positioned for it. So going forward.
But it comes with a lot of pain, though, with the subsidy removal.
Now, I have never seen anywhere in the world, or even in a normal business, you cannot create success without saying you had sacrifices made. Now, if anybody says it did, please, I'd like to meet them. Now, the reality is we had to make sacrifices. Subsidy had to go. FX unification had to happen. To a manufacturer, FX unification is immediate impact on your bottom line, which is you're going to have exchange rate losses. Now, you have an exchange rate losses that's going to happen. In this case, we have two types of exchange rate losses. We look at it from the official point of view, then we look at it on the unofficial point of view. A 460 to a 760, you're looking at 65% devaluation. Pure and simple. Then you take the real factor, which is where all the manufacturers have been. I don't know where CBN was for all this while. Most of us were looking at the window at about 630. Take a 630 to a 760, you're looking at a 20 to 25%, depending on what rate you got. Now, that has happened, but neither was it that they were getting the money. No, we didn't get it. It wasn't available. So the reality was the unification needed to happen. Now,
and with the unification, would you say manufacturers are starting to see that foreign currency already?
I think they are, because the window has changed. It's now an import-export window that allows everybody in and out. They are seeing it, because now it plays in the fact that exporters, which were actually selling at the way they felt they wanted to sell, now can enter the window at a free rate. Me and you agree a rate, we do the deal. If I don't, that's my choice not to sell. So the scenario is changing. Yes, the instantaneous impact of the uncertainty is why we're seeing the figures at the 750, 760, 780 type of mark. Now, is it going to remain that? I don't think so. Even if you look at the figures coming out from Bank of America saying Nigerian naira is undervalued at where it is today, I totally agree. I see a naira really after devaluation of 650 to 660 because of the impact element of the devaluation. Now, when we look at it, impact element. Now, you devalue a currency. You actually unify, you make it available. Now, you make it available, my cost of my certificate of importation is guaranteed. I'm an investor coming into it. Unfortunately, I'm not a great believer in FDI because most of our FDIs in Nigeria are short-term related money instruments, which means they're going to stock markets, money instruments, treasury bills, bonds. They're not really going, the majority of it is not going to long-term. Now, which means that
that's FPI hot money.
Hot money, right? So we're at risk anytime there's a problem because everybody is trying to go out immediately as the same way they rushed in. Now, we look at it that the manufacturers are taking a hit. Then how do you soften the blow of the heat? So it's a solution that you have to look at it. It happened before. Between CBN and BOI, we had the intervention funds that refinanced gaps. Now, I've created a gap. I've maybe lost $1 billion or $2 billion. Now, that can impact my wage bill. It can impact my workforce. It can mean I need to lay off more people. Now, I have no working capital to work with. Instantaneously, what do you do? Now, this is where the banks have to open their eyes. The banks, first of all, the commercial banks, need to instantaneously start looking at refinancing. Now, how do I restructure your loan? How do I restructure your working capital? How do I free up new working capital for the manufacturer to actually continue?
And that's after raising rates to fight inflation.
The rates, where I would say now we have to come in and come in a bit differently. It's coming the same way the CBN came in under Sanusi, where you had the CBN BOI intervention funds, which were there geared towards refinancing gaps. It wasn't even geared towards new business. It was just geared towards refinancing gaps. At that time at 6+1, which was 7%. Now, but today, yes, interest rate will be about 9 or 10 or 12. You still close a bit of the gap. You stop the actual leakages. You stop the actual bleeding for most of these manufacturers. So for me, my proposal would be, how do we quickly stop the bleeding? It's medium-term solutions. The long-term solution is still going to end up paying us for the sacrifice. The second issue is the subsidy, which affects the manufacturers straight off. The bottom line is we have workers who have to come to work. Some of them have their own cars, some of them don't, some of them use public transport.
And we have to pay increased salaries at some point.
Now, my argument is this is the sacrifice we have to make now. Our wage bill would go up. There's nothing we can do about it. It has to go up. Now, because one, part of your wage bill is transportation. Transportation, some of your housing, some of your other feeding allowances come into it. Now, bottom line, transportation has gone up. Most likely, I'll say transportation bill is going up by about 100%.
Right.
But on the wage, what is the impact? Now, it's where we don't look at the impact on the bottom line. Now, for any manufacturer, two parts of your wage bills: the manufacturing cost wage bill and the administrative cost wage bill. For any normal business, it's just purely administrative cost on your profit and loss. So it's impacting your bottom line of your profit before tax. The question is, and this is where we need to look at the statistics, what is the statistics of my wage bill increase against, one, my turnover, two, against my profit after tax or before tax? Let's just make it simple, before tax. Today, what I see as an impact is 1% increase in the cost of the differential between a wage bill increase of about 75 to 100% straight off onto your turnover figures, basically. Secondly, you have the second figure, which is the profit before tax. At the moment, if you look at it, if you blend it well enough, it's a 5 to 10% impact on your bottom line. Now, 5 to 10% impact for wages, I don't think is the biggest sacrifice. For one thing that those same manufacturers or this country would benefit from on the long term. You've just said it earlier. The government has actually announced 400 billion savings. If we just say within the first 10, 20 days, they saved 400 billion, take the average, extrapolate it again into a month and just say, they will average of 1 trillion savings per month, times 12 is 12 trillion. Now, 12 trillion changes everything. It was money me and you or the federal government did not have to spend.
Right.
Now they have it to spend. Now you take that money and put it back into this economy. Take, for instance, that, okay, some of it is going to go into debt financing, the current expenditure.
So it's all about the spending of that money at this point.
To me, it's the spending of that money. If I take half of that money, 6 trillion, and put it back into roads, housing, schools, hospitals. Healthcare. Now, the key question is, those capital projects needs to be done by people.
Right.
Needs to be built by people. Needs to impact people. 6 trillion straight back into the bottom line of this economy. Every manufacturer, every business will feel the impact.
Right.
Then we would be able to actually deal with the long-term issues, because the wage bill increase, the cost increase will now equate back with the actual increase in business.
Right. Wow. So much to unpack there, and definitely everyone's looking out for the second half. At this point, we've had all the shocks, for the first half, and it remains to be seen what the manufacturing sector is going to do next, going forward. And we're expecting a lot from this, administration, definitely. Thank you so much, Mr. George Onofowokan, MD, Coleman Wires and Cables. It's always great having a perspective. Thank you so much. All right, now, so we're going to be heading to the markets just in a few minutes. Do stay with us. This is Business Morning.